All right. So once again, this is where we left off, right? We just finished doing the depreciation and the amortization for all of our assets, okay? And then now let's go ahead and complete the rest since we finished the last section here where we did the amortization for the goodwill, okay? So that's right here. So here, what do we have next?
Adjusted office supplies to $80 on hand.
Okay, so, right? How should we adjust? Our assumption here is, well, we bought office supplies, right? And now that we used some of the office supplies, now we have $80 left on hand.
So do we go business expense?
Let's look at the chart of accounts.
Okay.
Okay. Business expense, okay, is okay, but let's see if there's a better account.
I was going to go with office supplies. I'm having mouse issues though, so I'm trying to get to it in the assets to see what we owe.
Okay. So definitely we will be using office supplies. Okay, anybody else want to try another guess?
Okay, I'm back. I found it.
Okay.
Okay, so in the general ledger, under office supplies, under assets, it shows that we have a debit balance of 150. So since we have $80 worth of supplies on hand, I would take the 80 from 150, and that would be the amount of office supplies I used.
Perfect. So in this case, all right, let me find my office supplies, just like what you did. So office supplies, right? Right now I have 150. How much do I need to take off to get to 100 and to get 80 left remaining?
70.
We need to take $70 out. So just like this, right? My total remaining ending should be 8. Now in this case, how do I represent that I used these office supplies? Which account is going to represent that I used these office supplies?
Office supplies expense.
Office supplies expense, which is for $67.50. So with this account here, right? When we talk about expense, it's as if we used it, got rid of it, sold it, right? That's what an expense does, right? Or we purchased it to use it, things like that. So perfect. Office supplies expense is going to represent the amount of office supplies that we used for the month of August. So right here, right, we know by calculating the difference to get to 80. So we know that we used up a total of $70 worth of office supplies. So think it was 667.50, and we're going to credit our office supplies because we used it. We no longer have $150 dollars worth of office supplies. We only have 80 left. So office supplies account 11,800. Okay. So then what should be my description?
Would it be office supplies used in June?
Sure. All right.
Back to the ledger.
Okay, back to our ledger. Right? Since we're already here, I'll go ahead and do this one first. So 630.
June office supply usage.
Okay. Okay, for $70, right? That's how we get a total of 80 left on hand. All right. And we're going to go to our office supplies expense account. And we're going to debit our account for $70, giving our running balance a total of $70. Okay. So that should be it for that one. So now, what do we have to do here? Bless you, Felipe.
Thank you. Gotta pay the employees. She worked another full week. So Irene, um, do we first go to the employee section and calculate, then go back and
Okay, now, are we paying them?
oh no, all we're doing is filling out her timesheet.
Okay, so, okay. When is she supposed to be paid? What's 2 weeks from now?
23rd.
2 weeks from now. Because we paid them on the 28th. Right? They're gonna get paid every 2 weeks, right? So in this case, she's gonna be paid within 14 days. So July 12th will be the day she gets paid. Okay. Right? Irene Jameson getting paid $8.50. So for now, she worked a full week.
So she'd get paid for 32 hours?
40. But in this case, right? Mm-hmm. It's not time to pay her yet. So what are we doing here?
Won't we hold off till the pay period so we have the total hours and everything?
You could, but this is to accrue. Okay. Okay. Because we're trying to gather up all the monthly expenses for the month of July. For the month of June, excuse me. So in this case, right?
So just times it by the 40?
Okay.
Well, if she got paid on the 28th and we're just trying to pay her for June, it'd be for 2 days, wouldn't it?
In this case, she got paid on the 28th, but when did we submit her timesheet? We submitted on the 23rd, right? So therefore, she's already accrued one whole week, correct?
340?
Okay. This is what she earned so far. And we need to tally that in our books because we owe her $340 for the month of June. Okay, but we're not paying her yet. We owe it to her. This is the expense that you have to encounter for the month of June.
So would that be the payroll expense?
Okay, not payroll expense,
Payroll payable?
payroll payable. Good. Okay, so I'm sorry, you said payroll expense? Yes, it is payroll expense because it's for the month of June. Yes, and then since you're owing her the money, right, you're not paying her yet, you're going to accrue the payable. Yes, payroll payables or payroll liabilities in this case. So, with that being said, right, we're not going to calculate how much her taxes are because this isn't the amount that we're going to tax her at. Right? We don't tax until we pay. And right now, right, if we calculate how much she's going to get taxed at $340, right? That's not going to give you an accurate number. In this case, we're not writing her a check yet, but this is how much salaries and wages that she's accrued for the month of June. This is what we owe her for the month of June. Okay. So how am I going to journalize this?
I don't wanna get it wrong.
Then you just go.
The payroll payable,
Okay, so can a payable go first? Can a payable be debited?
payroll expense,
Payroll expense. Good. Now, what is the specific item we use under payroll expense?
payroll payable,
Not payable, payable.
um.
Salary and wages expense.
Salaries and wages expense. Excellent. Good.
Bless you.
Okay. All right. What was the amount that we calculated?
340.
340. Good. So then, which account are we going to use to represent that we owe her $340?
Now, would that one be the payroll payable?
Payroll payable, or payroll liabilities. What
Oh.
specific account are we going to use?
Let's see, it is salaries and wages payable.
Correct. So in this case, right, this is what we accrued. This is what the amount that we owe her for the month of that she's earned in the month of June. Okay. So in this case, 240.10.
Yeah.
Perfect. Okay. And we owe her $340. Right. What should the description be?
Partial payroll for June.
You do part, okay. I'm going to put to accrue Irene's
Wages for a full week.
okay.
And then to the ledger,
Okay, to the ledger, good.
salary and wages expenses.
So that should be right here.
$630. Irene's wages full week. General Journal 23.
So what is the grand total balance in the salaries?
884.
$884.
And then over to salary and wages payable. And assets?
What's a
And
payable?
liabilities?
Liabilities, good.
Same thing, Irene's partial wages for 1 full week. The credit of 340. And that's it.
Mm-hmm. All right. So then, last but not least,
Accrue Albert's commissions.
to accrue Albert's commission. So how much money has Albert earned so far?
271.78.
271.78. So I'm gonna highlight this too, so we know that this is an accrued amount. Okay. So 271.78.
So then that would be for the commissions expense.
Commissions expense, good.
Account number 60820. For the 271.78. And then commissions payable. Account 24020. To accrue Albert's commissions. And then to the ledger. Same thing, would it be accrue Albert's commissions?
Okay. Two.
No journal 23. Debit for 271.78. For running total of 411.96.
411.96. Good.
And then to liabilities. Commissions payable, 630. Secure Albert commission. Journal 23. First credit of 271.78. And that's it.
That is it. Okay. So now we finally reached the end of our book. So here I'm gonna tell you when we do our closing process, you're gonna start on the new page. So in this case, you could draw your bar anywhere to let you know that you have completed this month's transactions.
Can you go back to the liabilities to where you were at, please? In the general ledger. Okay, I'm good. I just wanted to make sure I was in the right spot. I'm having issues today.
No worries. Okay. So I'm going to make a note here in my journal that I am now going to complete the adjusted trial balance. Okay. Okay. Once again, keep your journal there because, well, actually, yeah. We'll get to it probably tomorrow. If not, maybe we'll finish it today because the next thing we're going to do is we're going to do the adjusted trial balance. And we'll take a break and then go do the financial statements and then we'll go from there, okay? So for now, just go ahead and pull your journal down because we're going to be focusing on just the financial forms and just your a general ledger. Woo, this Monday is hard. What was that?
What exactly are the financial forms?
It's the one that has all the trial balances and everything. So if you're using the worksheet, yours is just the adjusted trial balance. So in this case, here we are, right? And we're just going to be using the general ledger. Okay. And what I'm going to do is, once again, to save you some time since it's already half done for you, okay? I'm going to go ahead and delete my adjusted trial balance. Okay. And I'm going to make a copy of my unadjusted trial balance. Okay, so make a copy and I'll place it right in front of my income statement. There it is. And I'm going to rename it to my adjusted trial balance. Okay? Because what I want to do is I'm going to add a bunch of more accounts in here so we can finally look at all the accounts that we worked with. Okay? And what I'm going to have you do is we're going to recalculate our main accounts because some of them are going to reflect a little differently than we would on a normal basis because we have contra accounts and we're going to see how it affects the main account. All right? So there we go. Again, I'm going to change this to say adjusted trial balance. Okay. So once again, you should have your list.
I'm sorry, my adjusted trial balance is blank.
We made a copy of the unadjusted trial balance. Do you need me to go through it again? Like how to make a copy of it?
I made the copy and then we delete the adjusted one, correct?
Correct.
think I lost you for a second. And then rename it adjusted.
Mm-hmm. Correct.
Okay, I'm with you.
Okay. So there we are. I renamed my adjusted trial balance. So now, like I said before, right? Some of these accounts will change because of we're going to be adding in our we're going to be adding in our contra accounts. But at the same time, we have to adjust the main accounts because it's going to have both main and contra account under the same main account. Okay, so for example, let's go ahead and dive into our first one and let's enter in our numbers. Okay, so let's start with the very, very, very first one. Okay, which is our bank account, right? Which consists our checking, our petty cash, and our cash in the register. In this case, right, let's see, I think my amount that I have in my checking account has changed, right?
Yes, it's the only one that changed on that.
Perfect. So in his case, it changed to
13,142.60, which should bring your bank balance to 13,952.60.
perfect. Excellent, right? Because, right, petty cash, we didn't do anything to it, right? All we did was replenish it. We did not increase it or decrease it, right? Cash in the register, same thing there, right? We still have at least $310 in the cash register to exchange when we have sales, okay? So good. So those numbers are the same. No extra formula added here, okay? What about my accounts receivable?
Stayed the same at 1531 and 95 cents.
Okay. However, what do we also have here?
Allowance for doubtful accounts.
We have allowance for doubtful accounts. So we already calculated that 5% of the 1531, which is the 7660, right? That is going to be uncollectible. That's just what we claimed, right? That's just the standard of business that we have a potential risk that any of our customers could fault on their payment. So in this case, I'm going to insert a line here and enter in my allowance for doubtful accounts. Okay, in this case, it's a contra account. So contra account allowance for. Okay. And in this case, just to kind of define it a little, I'm going to change it to black. Oop, not the background, but the font color. I'm going to make it black. So then you know that this is it's a sub account. Okay. So here, right, we know that it has a credit balance, right, of 76 and 60, right? So in this case, right, the main account, which is my allowance for doubtful accounts, right, it's going to be my main account subtract, or in this case, subtract out my contra account, right? Because the contra account reduces the main account. And in this case, if I press enter, right, it's going to show me that the total sum of my main account subtract out my contra account, because the contra flows in the opposite direction, right? You have a debit minusing out the credit to get a difference between of 1455.35, okay? And all I did here was, instead of associating the allowance for doubtful accounts as its separate own credit account, I summed it up in the main account because underneath accounts receivable consists accounts receivable as well as the allowance for doubtful accounts, because this contra account is directly correlated to the main account of accounts receivable. So that's what I did here, right? If you guys remember, the way that we organized it is that the blue rows, or in this case the blue column, is my main accounts, while the black columns are every single account that exists in the book. So in this case, I noted that I have for allowance for doubtful accounts as 7660. But what I did here was I took my main account, which consists both of these accounts, right? And I'm gonna take my accounts receivable and subtract out my contra account to get me a total sum of my main account to be 1455.35. Okay, so that's how much that is still good, right? Good debt, where we have a potential for 76 and 60 cents to be a bad number. All right, and this is where when we calculate our bad debt expense, or when we calculate just allowance in general, right? This is where you have some kind of account balance that exists in the allowance for doubtful accounts account. Okay, this is how you get a balance in there, by calculating all this and always keeping a track trail of this right here. So this is the amount of bad debt that I'm potentially going to have at risk at the end of June. All right. All right, so is everyone good?
Yes.
Okay. So let's move on to the next one. Business supplies. Okay, so in this case, right, we made our adjustments. So how many cups do I actually have now for the medium cups?
The total for the medium cup,
That I have right now.
9218.
92.18. All right, so that drastically changed my formula here, right? Because my business supplies consist of my medium, large, sugar, and my creamer. In this case, I'm making an adjustment because I no longer have those cups anymore, right? I sold them along the way. What's my balance in my large cups?
216.69.
216.69. Okay. What's my value in my sugar?
2160.
21.60. All right. And last but not least, what is my total amount that I have in my creamer?
17963.
179.63, right? And that made up a total tally of $510.10 worth of business supplies left in my business supplies, right? That's how much I have left, is $510.10. So if we compare and contrast, right, by looking at our unadjusted, right, our business supplies was at 1550.89. Now it's down to 510 because we used and got rid of these items, right? Every time we sold a cup of coffee, that's one coffee cup that we sold or got rid of. So in this case, this is how much I have left on hand, is $510.10 worth of business supplies. Okay. All right. Next, we have here our office supplies, right? That was the last adjustment that we just did. How much do we actually have on hand?
$80.
We only have $80. Oops, wrong one. Excuse me. I was supposed to change the black one. So the black one, we only have $80 on hand. All right. Okay. So now we have inventory, right?
Looks like it's still the same.
Okay, so for the coffees, all right, we'll just double check them. Do we still have $53.63 of regular coffee? Yes.
Yes.
We also have $171.42 of Supreme Coffee. But wait, we also have our periodic inventory that we just converted, right? So how many coffee mugs do we actually have now? So that's going to be another entry to inventory, right? Because we need to count for the ceramic coffee mugs, right? How many coffee mugs do we actually have, or how much worth do we have?
106 for 386.12.
Good, 386.12. So in this case, my formula for my inventory is now going to change because I have one more inventory item to add, and that's my ceramic coffee mugs. Okay, so therefore I should have a total of inventory to be $611.17. Okay, so because I added a new inventory item in there, I need to calculate that as part of my inventory. Okay, is everyone good with me?
Yes.
Hold on.
Okay.
Okay.
All right. So here in the next section is going to be a tricky section, okay? Because under furniture, right? We did depreciation. So now we have a bunch of contra accounts that we need to include into every single asset that we have here. So in this case, furniture, right? We have four things of furniture, right? We got a table, we got our counter, we got our desk, and we have our display shelves. That means every single account that we have here, we need to add all four contra accounts. And what we're going to do here is we're going to calculate them against each other to give us a fair value or a market value, or what do we call it? Book value of all of your furniture right now. Okay, so right now, my furniture is outstanding for $9,033.75, right? Okay, so now I'm going to show what the total amount is going to reflect at book value. So I'm going to go ahead and insert each line right here with, I'm going to insert a couple lines here so I can add in all my contra accounts, right? Our very first contra account we have here is going to be the accumulated depreciation for the tables. Obviously, my tables, everything's going to be at cost, historical cost value. So none of my values here are going to change. The only changes here I'm doing here is I'm adding my contra accounts because depreciation, right? It reflects the amount that you actually used for the machines or whatever asset you have in the company, right? So for furniture, right? People sit on the furniture. People use the table to drink their coffee on. So in this case, they used our furniture. They used our furniture. In this case, they used our our tables and chairs, in which we valued the usage to be $78.63. So right here underneath table, right, we're going to associate this as Acct, my contra account, depreciation. It's up to you. I think I would use Acct deep, okay, right? Because in this case, your balance sheets, trial balance, whatever they all are, all your financial forms, you can use abbreviations. That's completely fine. All right. So I'm going to do Acct depreciation table, and because this is a contra account, I'm going to, or in this case, it's a credit balance, right? I'm going to go all the way to the right, right? Because this is all of my accounts here. And I'm going to go ahead and enter in 78 and 63 cents. Okay? That's my total credits for my accumulated depreciation for the tables, okay? We will calculate the grand total for the furniture later on, but for now, let's just go ahead and enter in all of the accounts and then we'll go from there, okay? So the next section here, right, my counter stayed the same. However, I have a contra account now. I have the accumulated depreciation for the counter, right? In this case, I used $14.21 for the counter. All right, under my credit side. Okay.
Can you give me 1 second? Okay.
So let's see. We have our desk set, right? That stayed the same, but now we need to add in our contra account. In this case, how much did we use the desk set for?
784.
$7.84. Okay. Last but not least, we have our display shelves, right? They stayed at $577.08. However, we have a contra account because we used them. So in this case, Acct depreciation for the shelves. Okay,
37.
$6.87. So that's how much we used for the furniture. So how I'm going to calculate my total account for my furniture is I'm going to reflect the fair market value right now, or in this case, the book value. What is it worth now in my books, right? Because in this case, I need to represent in my books that I purchased the assets, but that I also used the assets at the same time. So we're gonna go ahead and do an equal, right? We're gonna clear out that formula because this one we're gonna be adding and subtracting. So if we know that our booster tables right now are $6,605.08, right? we're going to subtract out my contra account of 76 and 63 cents, right?
78.
78, yes. 63. Okay. Then, of course, because I'm adding all of my furniture together, I'm going to start adding in my furniture, which right now is at $1193.22, and I'm going to subtract out my depreciation for $14.21. Okay. I'm going to add to my furniture 658.37 for the desk set, but I'm going to subtract out my depreciation for the $7.84, right? Last thing I'm going to add to my furniture is going to be my display shelves, okay? But subtract out my accumulated depreciation for $6.87, okay?
And the total's 89.26.20.
Good, right? This is your book value for all of your furniture, okay? Because this represents, right? You could break it down in each one and solve for it, but remember, right? We must keep the historical cost exactly how it is, right? And only use the contra accounts to basically decrease the value of your actual original asset. In this case, I just went ahead and just added all my furniture and just basically subtracted all of my accumulated depreciation for the furniture to get me a total book value for my furniture to be $8,926.20. Okay, where opposed to if we look in the unadjusted, right, before we took depreciation out, my total furniture was outstanding for the $9,033.75. Okay, so that's the difference when you purchase your assets at historical cost. This is what happens when you need to adjust it for the fact that you used the items here. It's going to give you the grand total at book value. Okay, so there we have it.
Can I see that formula again?
Mm-hmm.
Hold on here. Why is mine different? Equals 822 plus 823.
Are you adding them all?
No, okay. Well, see, I did it one way and it didn't come out. Because,
Okay.
like, at first I did equal sum of the debits minus the equal sum of the credits, and I got a different figure.
Okay.
So what I'm doing is I'm looking at my formula and comparing it to yours.
Okay.
Okay. E23 plus this E24 minus the E25 plus the C26 minus.
You should have got the same exact.
Okay, wait a minute. I see my problem. I'm gonna mute myself for a second.
You fat fingered another.
Okay, what's the total you have? Okay, 89.26.20. For some reason, it had my 784 in the formula, but when I clicked on the formula, the box wasn't lit up, so I had to just rewrite it. Like I said, I didn't use my laptop at all yesterday. I didn't turn it on, and today it's mad.
Okay.
Basically, that's what it is. But so, like I said, I'm trying to help and trying to fix my issues at the same time. So, but I'm good now.
Good. All right. So we got now a fair market value, or in case book value, right, of $89.26 worth of furniture. Okay, so of course, every fixed asset that we calculated accumulated depreciation for, you're going to do the same thing. So same thing for your office equipment. So office equipment, right? We had a computer, a printer, and the cash register. So let's go ahead and insert our boxes here. Okay, because we got to make room for all of the accumulated depreciation. So starting with the first one, a cum depreciation computer. Okay. I'm just going to go ahead and type them all in since I already know what they are. So accumulated depreciation printer and a cum depreciation for the register. Okay. So once again, the computer is still at 1834.84, but now we have a depreciation which we calculated to be $61.16. Okay.
Can you give me a second to type up the?
Mm-hmm.
So we're on a computer right now, right?
Mm-hmm.
Okay.
For 6116.
116.
Okay. Our printer is still 378.87. So we can leave that. But the depreciation that we calculated on this one is $12.63. Okay. Our cash register is still $649.49. But we calculated the depreciation on that one to be 2165. So once again, we only have 3 items under office equipment. So let's go ahead and update this formula, right? We're going to wipe it out and we're going to calculate it, right? We're going to add our computer, right? But subtract out the depreciation, right? We're going to add in our printer because it's part of office equipment, but subtract out my depreciation there. Okay, last but not least, I'm going to add in my cash register, but subtract out my accumulated depreciation. Okay,
27, 67, 76.
2667.76 is correct. Okay, that's our total fair market value or book value as of right now for my office equipment.
So pretty much that formula is going to go all the way down to equipment and vehicles as well, correct?
Correct. Correct. So if you guys want to kind of go a little faster, it's up to you. Okay, so equipment, right? We have 2 equipments. So let me see. I'm going to add in my accumulated my contra accounts. So I should have an ACUM depreciation for the brewer. Okay. And I should also have an AQ depreciation for the grinder. Okay. Right. So in this case, right, my coffee brewer right now in grand total for both of them is $4,505.29, right? Which we calculated the depreciation to be
$96.20.
$96.20. Right? My coffee grinder right now is 41.45.57, which we've calculated the depreciation to be
6909.
6909. So once again, same thing here, same thing. The formula is gonna do the same thing. So for equipment, right, I'm gonna add my coffee brewers, minus out my depreciation, add my coffee grinders, and subtract out the depreciation there.
84.85.57.
84.85.57 was correct. Okay. All right. Here for our depreciation, we have here is our truck, right? The truck is for 32,208.90, but we calculated accumulated depreciation on that truck. So I'm going to add it in here for the AQ depreciation for the truck. Okay. Oops. Which is for a grand total
57.67.
57.67. So in this case, for my vehicles, right, it's going to equal my 32,208 minus my 257. Okay, so what's my total amount of in my vehicles?
$31,951.23.
Good, right? Let's take a look at our prepaid accounts. Right? Did this value change?
No.
No. Okay. What about my deposits?
No.
No, that did not change. Okay, my goodwill, right? I have an accumulated amortization on my goodwill. So in this case, I need to create an extra line here to calculate my accumulated amortization on my goodwill. Okay. Which in this case, how much was my accumulated amortization for my goodwill?
11.67.
1167. So therefore, my goodwill should show me, or should be, a total of
$2,088.33.
$2,088.33. Good.
Can you give me a second to get caught up, please?
Mm-hmm.
Thank you. goodwill, the debit is 2088.33 and the credit's 2100.
The debit, okay, for the main account, it's 208833.
The accumulated.
Yes. Okay, but for the regular accounts, like on the, so I guess the second and fourth column, those the black numbers are going to represent all your numbers. So those ones, the 21 is still the same.
Okay.
Okay. So there we have it. That's all of our assets. Okay. So that's the difficult part one, is that one, because this one we need to calculate what our book values are. Everything else, you don't need to calculate anything. All right. So let's start with liabilities, right? Okay. Liabilities are accounts payable. What's my total value in my accounts payable?
849.81.
849.81. Wait, that's my value? That shouldn't be right. That's not right. It's this one over here.
Yeah, 662091.
662091. Okay. 662091, right? That's my account balance. Okay. Okay. What about my Visa payable?
We paid it off, so it goes to 0.
Okay.
Hold on. Why is my Visa payable so high? Oh, I typed in the wrong one. Okay, so this was 662091. So my Visa payable is 0, since we are trying to pay it off. Okay. What about my notes payable?
649.49.
So that stayed the same. All right. Now I am diving into my payroll liabilities. So here I added to my payroll liabilities. Okay. I added 2 more accounts in here, right? Because I accrued for Irene's salaries, and I also accrued for
Commission.
commissions. Good. Right? These are money that I owe my workers. Okay. So that means my payroll liabilities is going to change, right? So first, let's start off with the first one. My salaries and wages payable is right now
340.
340. Okay. What is my total commissions?
271.78.
Okay. What about my employee FITW?
4016.
4016. My employee OASDI.
3373.
My HI.
789.
My payroll tax.
4162.
FICA good. FUTA.
3264.
SUTA.
1632.
And lastly, workers' compensation.
740.
Okay, so in this case, right, we need to change this because we added 2 more accounts. So you can do your equal sum here. Where's my parenthesis at? Okay, there we go. And add up
791.
54.
hold on, I didn't grab enough numbers.
That's what I got.
791.54. Excellent. All right, let's see what else we have left for my liabilities. Okay. Sales tax payable. Right, didn't incur any of those. Sales tax payable, is that number the same?
What about unearned revenue?
Yes, it's the same.
Unearned revenue, do we have a value in there? Or do we have a balance in there? No. So in this case, you don't really need to add it in there.
Okay.
So again, sales tax payable is the same. But what did we have here?
Interest payable.
Interest payable because we accrued some interest and we haven't paid it yet. So therefore we owe interest payable. Right? Interest payable will always be a separate cost to you because it's separate from your loan, it's separate from your credit card bill, right? It's a separate extra cost that you have to pay for borrowing money. So in this case, what is my total interest payable?
2829.
2829.
Which brings the balance to 2017-22.
For what? Where did you get 2722?
Or do we minus the 2889 from the sales tax? Oh, it's its own account.
Yes.
Okay.
Okay, so it's a separate main account. And let's see, did we make any changes to our loans?
Yeah, the truck loan.
Good, yes, we did make some changes to our truck loan. It is now 28,445.14. Okay. So in this case, I am done with my liabilities. So let's see, right? I don't believe any of my equity accounts changed. So my owner's equity is still at 30,000 and my owner's withdrawal is still 3,000. So no changes there. That won't change until we do our post-closing trial balance when we close out all of our accounts out to our equity. So in this case, we don't need to add anything in here. Okay. Let's check out our revenues. Okay, anything changed from my revenues? So when I sold my coffee cups, okay, for sales, okay? For my for my regular coffee, did that change?
No.
Nope. Okay. Same thing to my supreme coffee, should be the same, right? Same thing with my sales medium regular coffee, should all be the same. So your revenues has not changed at all. Okay. Now in this case, right, I'm going to keep this separation between my sales returns and allowances, and my sales discounts, because once again, those are all standalone main accounts. Even though my sales return and allowances and my discounts are counter, or in this case, they're contra main accounts, right? I want to keep them standard as main accounts because it will help us be able to calculate our income statement, right? Just keep them separate for now. So all my sales should stay the same, right? All the way throughout. My sales returns and allowances, right, is still outstanding for $19.91. Hold on, my sales returns and allowances. Right, so $19.96. My sales discount is still $1,979. Okay. And my delivery income is still $300. Right? We don't have any interest income. So in this case, my whole entire revenue section should have stayed the same. No adjustments there. All right. So now we could go to our cost of goods sold. Now here we did make an adjustment here because now we have a new main account here, which is my cost of material. Okay, but let's just go over first real quick my cost of goods sold. So again, just to double check here, my cost of goods sold for my regular coffee is still $1374.87, right? My cost of goods sold here is for my Supreme coffee is $14.50. Oh, wait, now we have another one, which we calculate at the end of the given period, right? We now have a cost of goods sold for the ceramic coffee mugs. So therefore, we need to add another account in here to represent the cost of goods sold for my ceramic coffee mugs. So COGS, ceramic coffee mugs, okay? In which this case, how much was my total coffee mugs that I sold?
1183.83.
1183.83. Okay. Oh, 80. I have 84.
Oh, crap.
I have 84.
Everybody has 84?
Yes, I do.
Let's see. I'm going to double I'm going to go ahead and double check my journal. Let's see. Cost of goods sold was here. Cost of goods sold for my ceramic coffee mugs was, I have 84, and did we double check to see if our debits and credits match? Let's see.
You have Sun.
Oh, thank you. So I have 1592.20 on the left.
Yeah, it's the same.
1592. Okay. So
Okay.
I have a question. I missed something. What do we think we have a discrepancy on?
because we all had. I mean, I had 1183.84 on my end, but Nicole had 1183.83 on her end.
Oh, okay.
So here we go. Cost of goods sold is now going to have,
4,009.54.
hold on, I added too much.
Here.
What did you get, Nicole?
4,009.54.
Okay. Alan, are you okay here?
Yeah, no, when I said that, I'm having issues. I'm fine.
Okay.
I'm actually ahead.
All right, that's fine.
I'm just trying to get stuff typed in because I keep having issues and I have to figure it out after class. So.
Okay. All right, so that's the cost of goods sold, right? I've also mentioned we calculated the cost of materials, right? Because we used the coffee cups, we used the sugar, and we used the creamer. So in this case, I need to add 5 accounts, right? One for the main of the cost of material, and then I need to divide it into the sub accounts for cost of materials for all of the items here. So in this case, I'm going to go ahead and add 5 lines in here since I know I have 4 sub accounts and I have 1 main account. Okay. So once again, this account is going to be cost of materials. Okay. And this one's going to be
To get them all in there.
say that again?
Can you give me a second to get all 5 of the lines?
Yep.
Okay.
Okay, so we got cost of materials, right? And we can go down one by one. So first one we have here is cost of materials for the medium coffee cups. So COM, medium coffee cups. Okay. What was our total there?
286.70.
286.70. Okay.
That was medium coffee cups, right?
Mm-hmm. Medium coffee cups for 286.20.
Okay, I'm good.
Okay. Next one we have here is going to be cost of materials, large coffee cups.
351.63.
35163. Okay. We have the cost of materials for the sugar, COM sugar,
43.20.
for 43.20. And then last but not least, we have cost of materials for creamer,
359.26.
359.26. 35926, yes. Right. So this one's pretty easy, right? You could take your cost of materials, right, for the main account. You could just equal sum all for numbers here for the medium, large, sugar, and creamer. And what do we get a total for our cost of materials?
1040.79.
1040.79. Okay. Good. Okay. That's it for our cost of goods sold. So then all we have left is going to be our operating expenses. So one at a time, right? All of these are most of these are main accounts. First one here is advertising expense. How much do we have there?
185.
185, so no changes there. Okay, so now we encountered bank fees. So insert that line above the business expense, right, for bank fees. Okay. In this case, what was the total amount of my bank fees? Total balance here?
369.64.
369.64. Okay. Business expense has changed, right? Because we encountered our petty cash fund. So in this case, my total here is going to be
1282.78.
1282.78. Okay, our freight expense. What happened to our freight expense?
It's at 0.
It's at 0 because we did our conversion entry. So in this case, we zero out our freight expense. Okay.
Insurance is the same.
Insurance is the same.
Subcontractor is the same.
Labor, okay, so labor expense is the same. Okay, subcontractor and temporary worker, the same. Okay. License permit expense is going to be the same. Loss on disposal of asset is the same. Okay. Now we have office supplies expense, so that's something that we have to add. So here, okay,
$70.
for $70. Next we have is payroll expenses. Okay, so yes, because we had to accrue for Irene's salaries for the month of June. Our, mm-hmm,
884.
good. Okay. Commissions expense,
411.96.
okay.
Taxes did the same.
Taxes are the same. So my total grand total for my payroll expenses are now,
93.94.
they're good. Excellent. Let's see what else has changed. What happened to our purchase expense?
It's at 0.
It's at 0. So in this case, purchase expense, 0. What about my purchase returns and allowances?
It's at 0.
It should be at 0. I guess did I not calculate it? Oh yeah, there you go. It's 0. Okay. Okay.
And expense did the same.
Rent expense is the same. Okay. We did not have any travel expenses or utilities expense. However, we have 3 more accounts, right? We calculated for bad debt, we calculated for depreciation, and we calculated for amortization. So in this case, all right, if you need to add a few lines, go ahead and add them.
And we're adding one, how many do we have?
3, right? Because that's the last 3 is bad debt, depreciation, and amortization. Oh, I'd even change rent expense to the blue color. Okay. So once again, we have bad debt expense.
$76.60.
77660. We have depreciation expense.
$625.95.
625.95. And then last but not least, our amortization expense.
$11.67.
$11.67. Okay. Which, right? My both debits and credits match on both main accounts and sub accounts. Okay. For my main accounts, I have a grand total of $99,381.97. For all my accounts, it's $100,096.19 on the debit and credit side.
Okay, hold on 1 second because I got a problem.
All right, no worries. Okay.
I'm off by 1,000 on my main account.
Okay, I know my problem's on the debit side at least.
Okay.
Can you scoot up slowly?
Starting from the bottom?
Yeah.
Okay.
I'm at labor.
Labor.
To 195.83, 1282.78, 369.64, 185, 1040.79, 4009.54, 1979,
1996.
1996, 3000,
Mm-hmm.
0, 2088.33, 1700, 56.54.17, 31, 951.23, 84.85.57, 27.67.76, 89.26.20, 611.17, 80, 510.10, 14.55.35,
Okay, so maybe you need to re-enter in your formula because you might have
Equals
added. You might have missed an account, added an account, etc., etc.
Okay, can I see the debit column from the very top so I can go down mine now?
Okay, so for main or all?
Yeah, just right there.
Okay.
Scroll down a little, please. Scroll down, please. Then scroll down a little. Okay, go ahead down to owner's equity, right, 3,000. Okay, um, right there.
the owner's equity was a credit for 3,000, right?
It was a debit for equity. Owner's
Yeah,
equity is a credit for 30,000.
30,000. And then
Owner's
the credit,
withdrawal is 3,000. Debit.
right.
Here's the comp. Okay, advertising expense. Equity. Oh, 1878. Scroll down just a little bit more. Okay, right there. Wow, this is really weird because I've got all the same numbers. Let me
Retry your formula. You maybe like this
Oh,
part
yes,
right here.
that's what I got. My formula now I'm regular 99, 381, 97.
um
Yeah, because sometimes I think if you did
yeah,
it on,
the
it didn't catch a few numbers. Could possibly be because right now I have it all the way down to the very bottom line.
Oh, you're kidding me.
so that one's right.
On my debits, I got 99, 382, 57. Let me try my formula again.
Right, 381.97. Oh wait a minute, hold it.
That's right. Nine
Oh,
nine
no,
381.97.
wait, no. No. Okay. Now see, I, my mouse wheel is acting funny, and now I'm noticing my keyboard's acting funny, and I've already swapped out the batteries, so I know it's not that. I think my keyboard's starting to go because when I'm hitting the buttons, I notice that like I'll put in 78, and then I hit enter, and I'll look on my board and it'll say 70. I'm like, no, I did not hit the zero. I knew, at first I thought I was fat fingering, but no, I got an issue I got to fix. So
No worries.
now
Where's
mine's still even.
you got it even? So 80. So
Yeah,
99.
I forgot that when you add lines at the bottom of an equal sum column, that you have to put those in. So when I followed all the numbers, then when you started saying that, it hit me, and I was already going there. And then with my mistake, I was I can't remember 66 cents off between the two columns. And when I looked, it did that again. It was supposed to be 97.98, and I think it came up 97.90. So it's got to be the keyboard.
All right.
Anyways, I'm good.
Okay, perfect. Now the rest of the stuff, you can cell reference. And that's the easiest part. Okay. So here, so Nicole, you matched. Felipe, did you match? Melinda, did you match?
Yeah, I'm good. There's only one thing I didn't have in the general ledger on the labor expense.
Mm-hmm.
For some reason, I didn't have anything in there. Oh, on the other side, the ledger side.
Oh, okay. Okay. Everybody else okay?
I'm off by 60 cents somewhere.
On the main or the actual, all the accounts?
Not on my credits.
Credits.
So on the bottom, my totals read 99, 381, 97. 99, 381, 97. 100, 096, 19. 99, 382, 57. And then 100, 096, 79.
Okay, so, all right, so it's one of the numbers here. So, let's see. Our very first number we have is the $300 for the delivery income.
Mm-hmm.
Okay. Sales we know shouldn't have changed, so none of those numbers should have changed. So you should have a total of 30,549.
30,549. Got it.
Then we have equity at 30,000.
Got it.
Your loans should be 28,445.14.
Got it.
Okay, then we had interest expense for 28.29.
Oh, 28.29. I got 28.89.
Okay, so that should definitely fix it.
That's a 60 cents. 28.29. Okay, I'm at 0.
Perfect. Okay. All right. Good job, everybody. So right now we're going to stop here and take a break, a nice 20-minute break. When we come back, we're going to go ahead and take the time to compute our financial statement. So we are finally on step 8 of this accounting cycle.